Ladies and gentlemen, K Kim here. Welcome to the market update, daily update. Hope you guys had a good day trading today. Market is down about 1.77%. I think the Russell and the banks got hit harder today, around 3% on those indices. Since the peak, market is now suffering as much as 5.19%. At the lows today, it has gone up towards close 4.29%. At the close, that we are witnessing about 4% correction since the peak there. So looking at the things in the short-term perspective, obviously benefit of the doubt goes to sellers, and we talked about this yesterday. I think we didn't see a big gap down, but bears are continuing to bring it down. They're not letting the buyers hang around. You can see even we had that dip buying activities occurred when that gap was filled, because this was yesterday, right? So you can see we opened slightly lower and then it came down all the way to fill the gap, and then buyers came in once that gap got filled. And I think it was a right decision for the bears bring it down even further, faster, instead letting the buyers hang around for a couple hours. We did see first hour of dip buying activities. However, second hour, bears brought it down. That's exactly what the bears want to see. Bears do not want buyers hanging around, floating around, because if you let buyers do that, they're able to bring it back up. So I think that was a good thing that bears were able to flush it down on next hour, not playing around, not fizzling around, not letting bulls get the opportunity. And then we saw that third hour continue to lower, and now we are kind of seeing 3 hours of trading data where bears are kind of letting bulls hang around here a little bit. So let's talk about that real quick here. So what we're seeing right now is what we do have is potentially what it looks like, potentially bullish engulfing type of candle, or maybe bullish tweezer type, but none of those candles will be confirmed until we see a follow through. Also, we can also look at this as potentially bear flag. However, the flagging pattern, it's been questionable at best, because that flagging pattern never worked out since early April. Let me kind of make example for you guys. You can see that looked like a bear flag, right? We bring down, there's a couple of hours of bulls hanging around. Well, bulls gapped it up. We gapped down, it also looked like a bear flag. You can see bears let bulls hang around for a couple days. Bulls gapped it up. Again, next couple days later, we see a big gap down. Lots of bearish momentum here. We saw a big flush hour on that hour back in April 21st, and then we see 3-4 hours of bulls hanging around what it looked like a bear flag, right? Down, a flag, that's what your textbook tells you anyway, right? And that's why I don't ever trade off of those quote-unquote textbook patterns, because it does not work. I mean, sometimes it works, sometimes it doesn't. It's just not a great tool to trade off of, at least in my opinion, right? So looked like it, we saw big, that was 4 or 5% down, suffering about 4 or 5% of correction. Yeah, so that's about 5% also. That's very similar to currently what we're witnessing here, right? You can see that's about 5%. We've seen these type of 5% pullbacks. Obviously, you can see that was a 5% correction. That was about 5%. This was a 5%, and bears truly brought it down. But I think as they did that, they filled all the down gaps, and that's a good progress. But as I've noticed here that, these bear flags really never played out. That looked like a bear flag that never played out. So you can see throughout this entire run, since the March lows, bear flag never played out. Even back in April 1st, right? You can see that here. A lot of bears were calling this as a bear flag before this thing coming back down to fill the gap at 224. That never happened. We gapped right back up. So every bear flag attempt has been failure this entire move. And we have something similar here. And you could say, well, okay, this time is different. Well, that's a conjecture. You're just conjecturing. You're just guessing, right? Obviously, this time could be different. Obviously, this could very well be different. And we could very well continue lower. But obviously, if you start going in that route, well, this time could be same. And it could continue higher too. So what we have to do is when we're looking at, especially when we're doing technical analysis, we kind of have to go by what has happened before. But first, we also have to go by what does it look like in the longer term. And so that's what we've been kind of, focusing on. In the longer term perspective, we still do have higher lows. So I still want to give benefit of the doubt to the buyers in the long term. Right now, in the midterm of things, it looks like we're trendless in the midterm of things. So I'm going to actually categorize this price action as a midterm neutral. Short term, we're talking very short term like this, bearish. So short term bearish, midterm neutral, longer term bullish. So that's the trend that we're dealing with looking at this 65-minute chart here. I've put in some couple different moving averages here just to accommodate recent price action. A lot of people have been asking me my moving averages on YouTube. So I'll put that there so you would always see, because I change my moving averages depending on the circumstances, especially for the short term chart like this in a 65-minute chart. It doesn't happen a lot in my longer term charts, like my daily, my weekly. I don't change them a lot. But when it comes to short term chart like this, looking at 65-minute chart, I do change them quite a bit, because in the short term of things, when you're analyzing 65-minute chart, things can change abruptly, right? You know how quickly things looked very bullish here just about a week ago, and how quickly that gain was evaporated. So looking at things in the short term, things gonna change quick. The sentiment is gonna change quickly. It's gonna be bullish in one day, it's gonna be bearish the next day. So I want to accommodate that change, and so now I still have that moving average, because I think that moving average, which is a 70 SMA setting it low, because that moving average I think is important, because that's where it scooped up these guys, what it looked like a bear flag, but that's where the whole move started. That big gap down and then brought it back up. So I think that moving average is still important. I'm going to look at it as a short-term moving average. The longer-term moving average, I've changed it to 175 simple moving average, setting at close, because I think when we did get up here, we saw a pullback. I think at this point, that's when April move started. And really the whole consolidation, right? This whole kind of a channeling action, right? Kind of a grinding, choppy, up and down, lethargic type of move we've seen since April. It all started from, I think, that move. So I've depicted 175, and that's where we're at. So looking at things longer term, bears also broke this trend line. We talked about this higher lows here. Well, so once that was broken, now I can categorize midterm as neutral. Now, we're not quite bearish yet because we don't have a lower low. We have equal highs, equal lows in the midterm. So we're going to categorize the midterm sentiment as neutral. So longer term sense, we got that 175 simple moving average. We're hanging around there. That's the level coinciding with what? The rising pivot. That's important level. That rising pivot here, we can actually draw a second level there. That rising pivot act as a resistance here, 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 and then flip back, act as support, support. We're back at that level. And that's the level, that's the vicinity where we saw that 277 gap area also. Keep in mind the gap, all these gap has been filled. And I think bears really brought it down after filling those gaps, because I was expecting some kind of bounce. We did see a bounce in early trading hour, but bears kept bringing it down. So overall, you have to say that the bears have won the battle today and yesterday. But now, can they continue, or is the buyers going to take advantage of potentially bears being exhausted in the short term, especially we saw what? 5% correction here, 5% correction here, and now we adjusted the 5% correction. Again, we got this big gap here, right? This big gap. That's the gap either bears want to come down, fill it, or gap it down and continue to pressure lower and go fill in 254. Buyers, you must protect this level. You must defend this level. You must bounce from here. Make sure bears do not come down any lower. Maybe 277 is okay early trading day tomorrow. 277. You must defend this gap because that's the second gap. That's the only second, no, actually third gap. We got the breakaway gap, continuation island gap, and another continuation gap. You must keep this gap open if you're gonna bring it back up. And also what buyers wanna do is buyers wanna take advantage that bears are getting tired in the short term. How do we know that? You can see the oscillator is back at that oversold level. And you can see every time when it was at oversold level, we did see a bounce. It may not right away next day, but eventually we saw a move. Let's see a performance of that. So every time when we see this oversold, when my oscillator gets to oversold level, what was the performance from that? That was 16%. That was 8%. And this was 5.3%. So you can see every single time since April 1st, is it April 1st here? Yeah, since April 1st, every single time when the oscillator got into oversold level, we saw a bounce. Maybe not next day, but eventually it did. And market performed 16%, 8%, and 5%. Maybe this time's different. We'll find out tomorrow. We'll follow up. We'll go from there. You guys enjoy your evening. I'll come back tomorrow and we'll talk about this and we'll go from there, right? Good luck trading tomorrow.